Welcome to Dukascoin TV's on finance. Now, of course, we got financial news updates for you on the way, and you already know our job is to keep you updated on all finance-related news, so stay tuned. As the world is recovering from the COVID-19 pandemic, there seems to be a whole list of risks brewing for the global economy. Many investors are also becoming increasingly concerned that the record high inflation amidst the Russia-Ukraine war, China's zero-COVID policies, and the Fed's plan to hike interest rates might affect economic growth. While some fear that we are headed into a recession, others believe that we are far away from winter. Now, the question is whether the declining conditions and the poor policy choices made will push the global economy from a slowdown into a contraction. Now, are we genuinely headed into a recession or far away from it? Today, we'll be looking at why the general populace and some investors think we are getting closer to inflation. A fear of recession is already the beginning of an impulsive investment, so do be careful. So to start with, what exactly is a recession? According to Investopedia, recession is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. Recessions are tough to predict, and even good forecasters like the Fed only know we're experiencing a recession once we're in one, not in advance. In March, jobs in the US are increased by nearly 500,000. We saw the Dow Jones Industrial Average trade within 6% of its all-time high. Also, US households have accumulated about $2.5 trillion in excess savings during the pandemic. Despite the good news, the big boys in black suits on Wall Street still believe a recession is coming. The fear of a recession has been reflected in the US bond market. This resulted from signals generated from what is called a yield curve inversion. But before we get into that, let me remind you what a bond's yield is. It is the return to investor from the bond's coupon interest payments, and the yield curve is a representation of the relationship between the market remuneration rates and the remaining time to maturity of the debt securities. The yield curve inversion is obtained by inverting the curve plotting yields on short and long-term US Treasury bonds. It shows that the investors are becoming pessimistic about the economy's near-term prospects. An inverted yield curve occurs when investors deviate from stocks to less risky bonds and has preceded all 8 US recessions since 1955. However, some economists believe that an inversion in bond yields is by no means a guarantee of a recession. Indeed, this indicator can emerge 2 years before an economic downturn takes hold. Campbell R. Harvey, a professor at Duke University Fuqua School of Business, also the first man to use the yield curve to predict recessions, explained that the curve does not currently point to a contraction as it has not been inverted for at least 1 full quarter. However, Harvey believes there is a real risk of a recession and that the Fed has been too slow to act on inflation. The yield curve isn't the only issue here. Also, China's unchanging decision to kick out COVID by locking down big cities such as Shanghai threatens to deal with its booming economy and global economy. The current lockdown in Shanghai, which has the world's largest container port, has placed more strain on fuel inflation and global supply chains. It's worth noting that China's problem is the world's problem. We are talking about the world's second largest and fastest growing economy. Although the Chinese authorities claim that the Shanghai port is still operational, industry data showed last week that there had been an increasing number of container delays. These numbers have skyrocketed to an all-time high. The Shanghai lockdown has forced small and large-scale businesses to shut down operations. Tesla, and many Chinese manufacturers are unclear about when they can open up their factories. The World Bank warns that the damages caused by China's zero-COVID approach are growing, as we can see from the World Bank's 2022 growth forecast. Last week, the World Bank slashed China's 2022 growth forecast, estimating that China's economy will now grow at 5% this year, down from 8.1% in 2021, the continuation of China's zero-COVID policies in the face of the Omicron variant will hurt economic activity in China and have negative spillovers onto the rest of the region. Now, the significant metric of a good economy is the belly of an average Joe. If the stomach is full, the economy is good. However, the war in Ukraine has disrupted the supply of grains and vegetable oils, pushing the global food prices to a new high, rising at the quickest monthly rate in 14 years. This growth has caused the greatest harm in poorer countries throughout the world. Since we cannot predict a recession until we are in one, the signs are clear: winter is on its way. So how can we prepare ourselves for a recession? In preparations for the recession, hedge fund managers and billionaires adjust investment portfolios. Although the choice of investments has led to separations in the house of billionaires, the younger generations are looking into cryptocurrencies like Bitcoin, while the older generation is sticking with traditional investment vehicles like stocks. While speaking at a large cryptocurrency conference in Miami, Peter Thiels, PayPal co-founder and venture capitalist, brought out an enemies list, an attempt to call out anti-crypto investors. Warren Buffett, whom Thiels also described as a sociopathic grandfather for previous comments casting doubt on the value of cryptocurrency, is at the top of Thiels' list and labeled enemy number one. Thiels also slammed JP Morgan CEO Jamie Dimon and BlackRock CEO Larry Fink and Buffett. He then displayed a photograph of the three men, referring to them as gerontocracy, a state run by the elderly.
That runs the country through whatever silly virtue signaling / hate factory term like ESG they have. Versus what I would call, what we have to think of as a revolutionary youth movement.
They should put part of their money into Bitcoin, he says. We need to push back on them. On the other hand, Warren Buffett's company, Berkshire Hathaway, bought up 11.5% of Hewlett-Packard shares in the last week in another unusual investment for the billionaire in a tech company. After the purchase, shares of HP gained nearly 15%. Before now, Warren Buffett had long shied away from investing in tech companies, saying that it was too hard to pick long-term winners. Now that the recession is a concern and a hot topic, it is advisable you don't get yourself pressured into the wrong investment. Only invest in what you feel comfortable with, and take the time to study the market and make the right decisions. You could always seek counsel of the financial analysts if you find it challenging to make the right decisions for the future. And that's all we have for this episode of On Finance. Thank you so much for watching, and make sure you check out all of our social media. Keep yourself updated on all sorts of financial related news and support your future financial investment decisions. Thank you for watching. Till the next episode.